And good afternoon. Welcome into Market Talk for Monday, March 29th, 2021. Good afternoon to you. And it is episode 100 of the show. Great to have you here with us once again as we kick off a new week. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. You can find our social media links there. You can also find all of our great streaming sources, our radio partners, the entire list. It's all on our website, one-stop shop, home on the web, markettalkag.com. Well, we had a fairly mixed day today, to say the least, in the grain trade. Bean oil skyrocketed higher a little bit once again, ended up moderately higher. That was really the only good positive market in the grains today. Everything else seemed a little bit lower, but we got a big week ahead of us with USDA reports on Wednesday. Let's talk about all of it, and let's bring in our good friend Bryan Doherty with Total Farm Marketing by Stuart Peterson. And Bryan, thanks for being back on. You were episode 1. And now you're episode 100, so I guess we'll call it another milestone show to have you on. I appreciate it, Bryan.
Well, we're happy and proud to be here and glad to be part of it, Jesse. You've been around a long time, working really hard in the trenches and making great progress on every front. So great to be here. Yeah, we kind of bookended beginning 100. So good. Let's keep going.
Well, and we can make this a very interesting episode as always, Bryan. And, kind of gearing up for Wednesday's USDA reports. That's been the big storyline here for quite some time. And it just seemed like today a little bit of liquidation, maybe some risk off trade, a little bit of mixed action as we gear up for that report. Now, I mentioned, I know bean oil recovered some of its losses from the end of last week, but that was really about the only thing that was in the green. I noticed Chicago and KC wheat finished there as well. But overall, what did you see? Was it just liquidation and some position squaring ahead of the report?
It is. We've had a number of days now. Well, let's start with corn. December corn on Friday finished lower for the third consecutive Friday. So, we saw these rains come into the plain states. We saw old crop prices basically stall on futures, and the market took a little bit more of a defensive posture here recently. And those are big concerns when the market just, can't get anything really going underneath it. The other thing, too, in corn that was a little bit disappointing 2 weeks ago, we had those big export sales to China, every day announcement of sales. And those were confirmed last Thursday on a weekly export sales number over, I think we're over 175 or at least over 170 million bushels. And yet the market has gone down. So kind of the old news is kind of mentality. We'll see what's lying ahead. The funds are strongly long. The commitment to traders still show them long as they've been pretty much all winter, but just not enough to create a push here. And so it looks to me like there's a little bit of a defensive posture going into the reports. Stocks should be supportive, we think, and acreage will probably be a little on the heavy side, probably closer to 92.5 to 93.5 million, with an average estimate of right around 93, 92 million acres.
Yeah, and talking on corn here just a little bit more as well before we shift over to the other crops. We look at these price levels; they're pretty good, and to me, it doesn't seem like if we come in anywhere around that estimate of 93, it doesn't seem like that might be enough news to really move this corn market higher. I could be wrong. What are your thoughts on that heading into the report?
Yeah, the interesting thing with markets is we've got all this news, but the market's going to move on its own timetable. And so we'll get some information on Wednesday on acres, which is an estimate, and then watch how quickly the tone changes to, well, just wait till the June estimate. That'll tell us the story. So we'll see. Now, I think the key to corn planting, and for that matter, probably bleed over in the soybean planting, is just how well the planting season goes. There's a tendency, if it goes well and prices are firm or high, that a little more corn might swing. Farmers might swing more corn in the acreage. But even with all that being said, the market's going to get that information. Then the market will get information on quarterly stocks, which is, will be whatever it's going to be. It's hard to outguess that one. And then the market will focus on planting conditions. Dry in the northern states, stays dry. Some of the other states went from a pretty kind of mean yellow or brown to white in areas. I'm talking eastern Nebraska, parts of Iowa, Kansas. But it's March, so we don't want to read too much into those tea leaves yet. The the areas that were dry, they got moisture, could go back dry real quick, or the areas that are dry could get moisture, and then all of a sudden you've got a real nice map out there. Most farmers are geared up and kind of ready to run when it's ready to go.
Yeah, and we are definitely watching that drought monitor, but like you said, it is March, soon to be April. That story is one that is going to play out here as we get more into the planting season and beyond. Speaking of weather, real quick, starting to hear some concerns about South America, about Brazil getting too dry in that safrinha corn belt. How much are you hearing about that, and how that could affect our markets here moving forward?
We're hearing about it, but it's kind of like when it was too wet. We heard about it, and the too wet really didn't drive prices higher, and the too dry, in theory, isn't driving prices lower. They're still stuck in that sort of pesky overall pattern. They were real dry early in the season, then they had sort of this deluge of rain in the mid part, and then net drying. I would say on that dry, stay tuned. The next 2-3 weeks start to really loom large as critical weather. So right after these USDA reports, the market may quickly focus its attention to the safrinha second crop corn, as that becomes really critical to the world supply of corn and whether or not it can meet the pipeline of demand that has expanded this past year.
Yeah. And I know as well, one more note on corn. USDA inspected 66.7 million bushels of corn for the week ended March 25th. And they're now about, what was the number? 53% of USDA's target for corn shipments to this point, with about 5 months left in the marketing year. So it seems like we're starting to maybe export some more corn, but that's definitely well behind the soybean pace.
What's behind the soybean pace, and if we think about it, it probably makes sense because Brazil right now, there have been, I don't even remember the number, so many ships lined up, but you had basically 2 months worth, 3 months worth of inventory to be shipped out of Brazil, waiting to load. Rain delays, delayed loading out of ships out of Brazil. That activity, though, worldwide shifts to U.S. corn inspections and corn movement. And with recent sales to China, we'll look for those export inspection numbers to be very solid, very firm. But you're right. If you look at the year, we're, as you said, just over 50%. We got a ways to go to meet those USDA projections. The sales are there, though. So we're almost to what the USDA said. So now it's just a matter of getting loaded up on ship and moving out. And so far, there's no sign that it's not. What we're hearing and seeing is some basis improvement for that June, July window to get corn into the pipeline. Then we hear some talk. Be careful when I say we hear, but we hear some talk of just ethanol plants maybe having trouble sourcing corn for summer as well. Farmers not really wanting to let go of inventory, probably a little bit more because of cash flow, willing to hang on to some gambling stocks in the midsummer.
And that's a very great point that you make there, Brian. Let's talk soybeans, and I'll stay on the export side here to start. We've shipped out some 91, 95%. It's somewhere up there. It's pretty high with 5 months left in the marketing year. I mean, we've really shipped out a lot of soybeans on the export front already. But we're looking at this USDA report coming up on Wednesday, and I feel that that's where we're shaping up to maybe see some fireworks because our stocks, our carryover is so tight already, Brian.
It is, and I ran the math too, and it's somewhere closer for me, or 88, 89%, but it doesn't really matter. It is monstrous. Those beans are inspected, they're gone, they're not going to be canceled. It's all about where, if we have additional inventory, where do you get it from? Because at 120 million bushels of carryout, there just isn't a lot of room to sell extra beans. So that's why this weather, we talked about dry weather in Brazil, probably advantageous in the bigger picture to get the pipeline moving with beans and getting them flowing out. Can you imagine if the wet weather stuck around another couple of weeks? China might have come in and bought another batch of beans, maybe ran us out of supply just because they could at least get it into the pipeline for their part of the world. So these things unfold. Now, typically, we kind of get into this window. We might start to see some talk of exports into the U.S. I haven't seen any of that, not to the East Coast at least. We did hear talk of that of soybean oil last week.
Yeah, I think I heard that same soybean oil talk as well. But yeah, it's very interesting. And we look at the pre-report estimates for planting intentions, and everyone's kind of focused on that 90 million acres for beans seems to be the favorite. But if we come in with a number lower than expected for acreage for soybeans, say it's in that 87 range, 87 million acres.
Mm.
What's that going to do to this soybean market if we come in with a lower than expected surprising number?
Well, if you look at what the USDA is projecting for carryout next year, and assuming those numbers don't change, you're talking if you lose 1 million acres of beans, just think about it, 1 million acres harvested bushels per acre, it's about 60 million bushels. So it cuts the carryout back to about in half, or if we're at 150, 160 for next year, at least in theory, it brings that number under 100 million. So what it does, though, it gives the perception. And markets move on perception. They move on momentum. They move on attitude. It leaves the market with the perception there's no room for error in the U.S. or to the world. And if that acreage number comes in lower, the market may quickly spark a rally to try and either ration the demand, that is the supply on hand. So either you slow down demand or ration supply, however you want to term that, or you run prices higher to create more supply through more acreage, or both. So the idea is to ration the supply and produce an incentive or create an incentive to grow more. So you'd probably have a pretty swift move upward in the market after that.
Mm-hmm. And I've heard rumblings from farmers. Now, again, I mean, it's not a huge base to go off of, but it just seems like there's more talk that growers want to plant more corn out there, even with these elevated soybean prices. And again, that could end up being wrong, but man, oh man, it's just to me, I feel like that's, like I said, where the fireworks could be on Wednesday is on that soybean side of the market, Brian. Especially, start factoring into that new crop price and more. We get a nice pop higher, and maybe that will change some minds. I guess it's hard to say.
Well, if you think about it, Jesse, it's where the volatility's been all year. You look at soybean oil last week, had limit moves up and down. All over the map here. You look at soybeans, so they're the market that, I should say every farm. It sounds like that, but a lot of farmers sold at $10. This was a really good reward. It was better than $9, so they sold $10 beans out of the field, and it just kept going up and up since then.
Yeah.
So that's a real sign of either tightening supply, growing demand, or both. It happens to be in 2020/21. It's both declining supply, increasing demand.
Yeah. Real briefly on the wheat side of the picture, I know this wheat market kind of leveled out today. It was pretty quiet there, but obviously heading into Wednesday, we're fighting for acres all across the country. And if any wheat acres go to quarter, soybeans, depending, I mean, that could shift the wheat side of the market as well. What are any thoughts you have on this wheat market heading into the report?
Yeah, Chicago wheat made a nice hook reversal on charts today after posting its lowest price since mid-December. So, on the one hand, nice positive signal, but it's at the cost of new 4-month low levels.
Mm-hmm.
Wheat, a couple of things. One, I think you can almost boil it down to this. Over the last 4 weeks, 5 weeks, do we feel that the world weather has gotten better or not? And I think it's gotten better. We did have the freeze, but it looked like there wasn't much damage from that. We had snow cover. Then we got much needed moisture in much of the wheat states. And so the crop conditions look better. Exports are always a swing vote for the U.S., but you get over in that Russia-Ukraine area, talk of better winter wheat conditions, even talk that maybe they will, the tax that they imposed in Russia, may pull that tax early, allow for exports, maybe a little bit more, or maybe the right word is less concern over COVID and the idea of having to hold inventories back. Maybe this COVID is going to be under control and you don't need food for security. There might be some of that. So wheat's had a pretty tough go of it. Yet you could see some wheat ground because of the drop off in price quickly move to corn or beans, in particular if we get some rally out of these markets heading into the second, third week of April.
And it'll be very interesting to see. Overall, on the grain side, we'll talk livestock here just a little bit, but overall, heading into the report, if I'm a producer and I'm kind of looking at the marketing plan a little bit and gearing up for potential, fireworks or not, either way on Wednesday, any advice heading into the report overall?
Yeah, so the kind of typical thing is, if you listen to our show today, is volatility and this could happen to that could happen. So the kind of the natural reaction to that might be, well, let's just do nothing. Let's just see what happens. If something comes out lopsided on the report, that can be really beneficial or really negative for you. So my advice to producers is to really think from a marketing perspective about being strategic And what does that mean? So we're being well balanced. Okay, you've had good price rallies, and now beans have come off their highs, some corn have come off their highs, some, but we feel a little negative on it because they've come off their highs. If it were the other way around and we looked at these prices and we were hitting new prices today, we'd be elated with $4.60 corn and $12 beans. So just kind of keep that in mind and make good solid cash sales. Stick with the original idea that where the price rallies to make cash sales. And then my advice would be to learn how to own it if you want to retain the ownership. I always say ownership's easy. You're one phone call away from owning if you have an advisor or broker. But if you own a bunch of it and don't do anything with it, and it starts losing value, the first reaction generally is I don't want to overreact, and then it goes down more, and then you finally give up, and it's just painful. So balance is where I would argue that's the key word for the week.
Looking at livestock here, Bryan, on the cattle side, a really nice day there today, a nice move higher. We got some feedlot country activity last week. Finally got some prices a little bit higher in cash country anyway. It seems like this cattle market's shaping up for a good week. What are you seeing over on the cattle side today?
Yeah, well, it looks like stronger cash prospects is what it looks like. Talk of 118, 120, retail carcass weights. You're talking 240 on choice cuts. So you've got some good underneath support under the market. Now, remember, we've kind of talked about heavyweight animals. We've talked about, kind of bigger inventory supplies, and weight gain's been good this winter. But still, if you look at cattle on feed report, you kind of look at the last hogs and pigs report, you kind of get the sense that we're not going to be swimming in inventories. And if the COVID's on the run and restaurants open, there's at least an initial sort of vacuum there where people need to resupply, and stores need to resupply, restaurants need to resupply. So there's where your demand pinch comes, in particular if supplies start to back off or back down. But as far as cattle are concerned, the thing I keep looking at, it's been a pretty good winter. It got kind of brutally cold there in February, but boy, what a nice winter overall. We talked about the dryness in kind of the northern plain states and out west. That's generally good for calving. It's good for cattle weight gain. So we still have plenty of, I'm going to say on-time inventory, because we just haven't had any of that real messy winter weather.
And that's a great point you make there. On the hog side, we were down a little bit today, but we held those front month contracts above $100 on the board, and it just seemed like maybe we're filling some price gaps here today before we maybe sit back and run this market higher yet. Is that what you're seeing in hogs, or are you seeing something different?
Well, it's a big uptrend, and if you look at slaughter for the year so far, down nearly 5%. That's pretty significant. And cattle slaughter down 3.5. So you kind of put those numbers together, you can see where both should be well supported on tightening inventories. What you want to watch for, though, is, are weights heavy or are they not? And they're a little bit heavier in some weeks we've seen, but overall pork production down 3.2%. I just can't help but think that when you look at those summer months, you've got to defend $100 plus, but I still think you do it with the put options. The overall trend is up. The momentum is up. The vision of potentially reaching 120 is out there. And that's where that hog market is finding its support from. Tighter expectations, tighter supply. And that all goes back. I think it just goes back to when we were seeing the euthanasia last summer and some of those things where, you couldn't afford to keep hogs around. In fact, we've talked to some hog producers that have kind of worked through finally the heavier hogs from last summer. That's how things were backed up. And now we got good prices.
Yeah, very, very true. Any thoughts on the dairy market here real quick today, Bryan?
It's doing its best. It's a lot of volatility, and it bounced back the end of last week. And you can look at some of the product values. We still think there's just too much production, too much product out there. We need to see something change. So that being said, if you're a producer, look at those back months. You can go second half of the year, averaging over $18. Do something with that. You don't want to let that become 16 or 15. It's just a little hard to be optimistic that. I think, too, that might be some of the problem with the corn market lately, is that the end user out there, including dairies or hogs, they've kind of seen the market flatten out. They're not chasing it right now. They know that if we get in the spring and weather is good, prices are likely to go down for the feeds. but that's also symptomatic of a dairy herd that probably has ample inventory of supplying cows, so they don't need to compound their margins by paying higher price for corn now. Could be a big mistake if we go upward, but they're on the sideline probably buying. They bought enough at these prices, for at least it seems like they have for now.
Mm-hmm. Brian, any other final thoughts? I know we got that container ship out of the Suez Canal today. I know that's messed everything up over there. It's nothing to joke about, but that's been a big topic of conversation. But seems like maybe getting that open and some of the outside macro factors, everything there. It seems like everything was doing okay today.
Yeah, as far as that, at the end of last week, well, it could be several weeks before that. Yeah, here, it's if things get backed up, and it's not pleasant for anybody that's stuck in that, and the logistics of it, but it'll probably be, when we look back, a bump in the road. It I'm not sure if entertaining is the right word, but it really just brought home just how massive these container ships are, and just boy, some of the what ifs, and how does this happen. So it was kind of sobering from that perspective, but I don't think there's, my best guess would be you just won't hear much about the implications of this as we get down the road a little bit, and it's logistical things get straightened out like that.
Very, very true. Well, Brian, I know you guys got great insight. I know you guys and the team there, Total Farm Marketing, will be working, through this report on Wednesday and have some great information on your website and more. And I know folks can reach out to you with a phone call or an email if they need some advice, can't they?
Absolutely. Reach out to us. Website's totalfarmmarketing.com. Call me at 800-334-9779. That's our phone number. Love to have a conversation. Or you can always email me, Bryan, at totalfarmmarketing.com. So we're there for you if you need some help or advice. Got big reports this week, so if you want to talk that through, we're happy to do that too.
Well, reach out to them, totalfarmmarketing.com, the website. Brian, appreciate the time. As always, have a great week. We'll talk to you next Monday.
My pleasure. Thank you.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, March 29th edition of the show. I'm Jesse Allen. Have a great afternoon.